I'm Samantha Sang. I'm the legislative manager and policy advisor at NextGen Policy. We also do business as NextGen California. So if you see us on bill analysis or letters as NextGen California, we are one and the same organization. So in addition to helping to shape our organization's multi-issue legislative package, I carry our education portfolio, which includes our student network. So I'm going to pass the mic off now to our other presenters here. I'm going to go to Mahmoud.
Hi, everyone. Thanks, Sam. Mahmoud Zahria, Western Regional Director for Young Invincibles. A proud advocate for the coalition. At YI, we seek to amplify the voice of young adults, 18 to 34, and student debt being a huge issue for us.
Thanks. And why don't we go to Winston next?
Hi, thanks so much, Sam. Hi, everyone. I'm really glad to be here. My name is Winston Berkman-Breen. I'm the Policy Counsel and Deputy Advocacy Director for the Student Borrower Protection Center.
Thanks. And do we have Chuck on?
Yes, hi, I'm Chuck Bell. I'm Programs Director in the Advocacy Division for Consumer Reports, and we've been especially focused on enacting Borrower Bill of Rights at the state level and protecting borrowers who have private student loans.
Thanks. And we have Cody, you still around?
I am. This is Cody Hunanian again. I'm the Executive Director at the Student Debt Crisis Center. Just as a reminder, we're an advocacy organization and we center the voices of student loan borrowers to impact public policy and end the student debt crisis once and for all.
Thanks, Cody. And Lindsey, are you on with us?
Yes. Hey, Sam and everyone. My name is Lindsey Clark. I'm Director of External Affairs here at Savvy. We're a social impact tech startup based in Washington, D.C., helping borrowers navigate through repayment and forgiveness, and excited to be here.
All right. Thanks, everyone. And thank you, legislative staff, for joining us today. We'll get started with kind of a lay of the land here with Mahmoud.
Yeah, so this is so 37,170 is the average student debt per recent graduate. 45 million Americans with student debt, and 4 million Californians with student debt. 1.7 trillion total student debt nationwide, and I believe in California it's about 500. Oh, there you go. So 3.7 million Californians with student debt. I believe it's up to 4 million now. 141 billion total student debt statewide, and over 500,000 borrowers are behind in their loans. So some recent updates with the coalition, really amplifying 2551, the Student Loan Servicing Act 2016, and this established a regulatory framework at the Department of Financial Protections and Innovation. And with AB 376, we really honed in on those consumer protections for student borrowers with the Student Borrower Bill of Rights. And with AB 424, this is really looking at strengthening consumer protections for student borrowers with the private loans and really ending those frivolous lawsuits against student borrowers. And so we really welcome, the champions that have been really working towards amplifying and supporting student borrowers in California. And we look forward to working with so many offices to ensure that our coalition efforts and we can amplify some new legislation, advocate for new advancements for student borrowers in California in the not too distant future.
So at the national level, as we've been hearing, there's a big push for broad-based cancellation of student debt. And as people may remember, President Joe Biden campaigned on a platform of canceling at least $10,000 in student debt per borrower as part of COVID-19 emergency relief. But so far, that decision has not been handed down. Also, when he was campaigning, he talked about canceling debt for low and middle income families and attendees at historically Black colleges and universities. But other voices in the Congress have been pushing very strong for debt cancellation, including Senate Majority Leader Chuck Schumer, and over 80 lawmakers have signed resolutions calling for an executive action to cancel $50,000 per borrower. And of course, our organizations and coalitions coalitions are also pushing for that in a very assertive and noisy and vigorous way. The president has asked the Department of Education and Justice to prepare memos on his legal authority as an executive to cancel student debt. Our organizations believe he has that authority and that he should use it as soon as possible. But the timing may be, a political issue. It's subject to some other factors. He's also been, of course, very weighed down in fighting for the Build Back Better Act. So maybe he will have more time to pay attention to this once that gets through. There's a growing body of research that shows that student debt cancellation is in fact quite progressive, especially when it considers disparities in wealth ownership in the United States, and it would greatly boost the economy and go a long way to helping address the racial wealth gap. Next slide, please. We want you to be aware that as you've heard in the last panel, that federal student loan payments are set to resume on February 1st, 2022. And the deadline was already moved a couple times. And so we think there's a pretty good possibility it is going to happen on that actual date. And so if you're a student loan borrower, you need to be getting ready for that in various ways. You should be contacted by your servicer. You'll should get an invoice that will give you 21 days to make a payment. But be aware that those payments and interest on federal loans that were paused are set to resume as of that date. As we also heard on the last panel, experts anticipate this could be a logistical nightmare. There's 4 major servicers, including Navient and Fed Loan Servicing, that are exiting the market, affecting potentially 16 million borrowers. So many people may lose touch with their servicer, and it's really important that you try and stay in touch with yours and find out who the new one is and get help if you need it. Advocates are saying that the Biden administration is working to fix many of the specific federal student loan programs, such as Pslf, which we'll hear about in a minute, but also that, as we heard, borrowers should not be thrown back into a broken system. And we see many problems that still need to be repaired, a lot more work that needs to be done. These are problems that have been many, many years in the making. We're not going to turn the corner overnight, but there's still a lot more to be done. Also important to note, during the payment pause, many borrowers were able to get on their feet economically. They were able to begin to purchase homes and support their families, meet their basic needs, and participate more fully in the economy. And there's a real risk that for people who are essential workers who are living on modest incomes, that they're going to be hurt by the resumption of payments. And so that we need to closely monitor that. But the pause does show the power that permanent student debt cancellation might have. And so we all agree that the president should use his unprecedented this moment to do that. And grassroots power from borrowers is very much a part of the equation. So your voice very much matters in this equation. We also just want to point out that while 92% of 92% of student debt are federal student loans, the state also has significant opportunity to influence debt cancellation for things like institutional loans and institutional debt arising from fees of various kinds that students are charged. So that is something that California as a state has some influence and authority over, in addition to dream loans, where student debt cancellation could really help and advance the economic prospects of undocumented students. So for all of those reasons, we encourage California to continue its work to address debt cancellation and servicer oversight at the state level.
Great. All right. Thank you so much, Chuck. So I'm going to give a brief overview. Again, my name is Winston Berkman-Breen with the Student Borrower Protection Center. I'm going to give a brief overview of the Public Service Loan Forgiveness program and recent overhaul, and then sort of tee up a conversation about potential legislative approaches at the state level to help with this federal program over the following year. So for those who just joined or are unfamiliar with the Public Service Loan Forgiveness Program, in theory, it's a program where after 10 years of public service work, borrowers will have the remainder of their federal student loans forgiven. It started in 2007, and in 2017, when the first class of borrowers reached that 10-year mark, we started to see the program was falling apart. There were just abysmally low acceptance rates. About 99% of folks were rejected. And in part, that came from very rigid restrictions on eligibility requirements. You have to have the right type of loan, be in the right time of payment plan, have the right exact kind of employer, et cetera. And this wasn't always communicated very well to folks. And for that reason, people working in public service work for over a decade have been denied relief left and right. So in October of this year, just last month, the Department of Education announced an overhaul. And essentially now through October of 2022, they are waiving a number of those specific eligibility requirements that were dinging people historically. So during this waiver period, anyone who's worked in public service since 2007 when the program started is eligible to get credit towards the 10 years that you need on your loans for forgiveness for any type of loan for any month that you were in an eligible public service job, which is any government job. So for legislative briefing, this is important for you all as in your role with constituents, but also for you all as individuals who might have loans as borrowers. You're working in public service, right? So during this next year, folks can get credit for things where they previously would not have gotten credit for. For some people, that'll put them past the finish line, so to speak, and they'll have their loans forgiven. We're already seeing millions, you can see on the screen, millions of dollars of folks are getting their loans forgiven. And for some folks, it'll bring them closer to that finish line. But it's not quite as simple, right? This is a great opportunity, but there's actually a lot of work to be done. So if we go to the next slide, I'll tee up some of those. So some of the challenges that borrowers are still going to face during the waiver period are, there's a huge outreach issue, right? Especially for people who understandably are distrustworthy of the federal student loan apparatus because they've been dinged once or twice along the way, or their servicer has really caused harm for them. So that's one challenge, is just making sure folks know about this. But the second challenge is that it still requires some level of affirmative steps by many borrowers. If you had a loan that was previously ineligible, you can get credit for it, but you have to do some things to get credit for it. And you have to make sure the government knows what your public service job was during the past 10 plus years, right? They can't give credit for something they don't know about. So we're thinking through some solutions to that, right? One is, how can we make sure that employers really step up, really work with their employees, public service worker employees, to get credit for them? And the other is, can we figure out a way to automate this so that individual borrowers don't have the burden of having to explain to the federal government where they've worked for the past 10 plus years? The federal government is already automating, doing a sort of data match program for employment records for federal employees and members of the federal military, but not for any state or sub-state government employees or other nonprofit employers whose employees qualify for Pslf. So thinking through, again, how to get employers involved and how to do some sort of automated process to get employment records over to Ed and do some data matching there so that borrowers don't have to do anything to benefit from this waiver. So thinking through a legislative lens, there are some challenges with that idea, right? So first and foremost, whenever you're talking about data matching or automation of something that concerns sort of HR records, there are privacy and data concerns. Second, this is not insignificant for an employer to decide to do this, even if it's the right thing in general and for their employees. So getting employers to sort of come to the table and do this could be a challenge. And then finally, another challenge is figuring out, where does this data live? Sometimes it's with the employer, but there are other data custodians, so to speak, who might have this kind of employment information that the Department of Education needs to match up to their loan information to make sure that folks who qualify for Pslf during the waiver and going forward can benefit. So thinking through legislatively, it's still relatively early days. This was announced about 5-6 weeks ago. What coalition partners, and we are trying to do right now, is identify who are those partners going to be, who are the employers or state employee offices who are going to work with us to figure this out. And at this stage, think through, what are the problems, what are the challenges, what do we need to resolve? Is it a data security issue? Is it a permissible use restriction on existing data? Maybe a pension system has data, but they're limited through legislation in terms of what they can use that data for, and this is not a permissible use of that data. And once we go through that process and work with the Department of Education in DC that has indicated they're interested in doing this, drafting solutions, right? And figuring out legislative fixes that can get folks on board, incentivize them to participate, but also reduce any barriers to make sure that this actually works. And although there is a timing consideration here in terms of the waiver only lasts through next October, there are potentially long-term benefits to doing this exercise and doing this legislation. We can start to think through other instances where existing data that was created for one purpose could be repurposed in a public interest use to make sure that employees or other individuals from whom data is being collected are able to be identified for benefit programs that they are eligible for but didn't know about, and to automate as much of that as possible. So I would say to any folks listening here, if you're interested or have ideas and would like to talk more, please feel free to reach out. We're very much landscaping right now, but would hope to work with legislative partners in California, as well as other public sector employees and employers to get this done over the next year. Thanks so much.
All right, thanks, Winston. And so just moving on to the next piece here, along the same line of thought regarding outreach to borrowers, we did want to highlight a recent report for you all. In the 2020 state budget, the California Student Aid Commission was required to bring together the California Student Loan Debt and Service Review Work Group. And the work group met over this past year and heard from different researchers, experts in and out of the state on how California can best support borrowers across the college affordability spectrum. So that does include our prospective college going students, current college students, all the way to anyone who is at any point in repayment. I had the privilege of joining the work group towards the end here, and in the final report, 6 top recommendations were highlighted, though all the policy solutions presented to the work group could also be found at the end of the report. All of us advocates here today are working on what it would look like to implement the first recommendation, the creation of a statewide student borrower assistance program, especially given the timing with all the changes happening right now. Thinking through an outreach statewide effort seems pretty critical. And so we're working with other partners as well. We're working with other partners as well on next steps for all the other recommendations as well in the report. We work closely with the advocates who work on like dream loans issues, the data sharing issues. So please feel free to reach out to any of us and we can connect you to the appropriate lead on that kind of issue. Going back to the Student Borrower Assistance Program. So we take a look at the landscape in California. There's currently very little to no state-funded resources directly to help borrowers navigate their loans. Throughout the day, we've heard, we do have the Department of Financial Protection and Innovation, DFPI. If you have a problem with your servicer, you can file a complaint there. Probably, but by that time, though, you're in a really tough situation. We do have DOJ, the Department of Justice, having a role in enforcement from some of the bills Mahmoud talked about earlier. But in terms of simple information, accessibility to resources for borrowers who are just trying to understand their loans, we're kind of lacking as a state. I try to want to, think about financial aid resources. If you're a prospective college going student, we have CSAC and many of the resources there and workshops to help you figure out your student aid, Cal Grant program, right? But we don't really have that on the back end once you are a borrower here in California. So that usually means calling your servicer directly, like we've been hearing, and that could mean staying on the phone on hold for hours. And that's not really the best way to get help if you need it immediately. We also know that servicers have been deceitful and unfortunately at times straight up lying to borrowers, giving them false information, and that has a huge negative impact on borrowers. So the state can and play a more active role in borrower education and outreach. And in 2019, the state of New York established this first kind of borrower assistance program. It's modeled after the healthcare enrollment programs that we saw with Obamacare getting rolled out. So it's a hub and spokes model, leveraging many trusted messengers and community-based organizations so that one group can act as a hub and have all these other spokes going out into the community and getting this information out there quickly. So our coalition, the Campaign for California Borrowers' Rights here, we started to take a look at what this would look like. We do believe that DFPI is probably best situated potentially to be the hub for this model. They have had long regulatory oversight. As you've been hearing, thanks to the passage of AB 376, there's also going to soon be a student loan ombudsman position there, and they can play a key role in borrower support. So we look forward to chatting with all your offices more this coming year, whether it be through a budget item or through legislation. And we hope that you'll be able to recommend a support position to your assembly members and state senators when the time comes as appropriate. And we do want to get to a couple questions. Sorry, let's see. Okay, thanks, Cody, for being in the chat there. So with that, then we will still be on to continuing to answer questions. And of course, if you want to get in contact with any of us about these efforts, reach out to us and we will connect you to the appropriate advocate. But for now, we do want to get over to the student debt workshop portion to make sure we're getting resources to you right now with your student loans. So thanks, and I'll pass it over to Cody.
Hey, Sam, thank you so much. And yeah, I see already in the chat, in the Q&A box, some great questions. So please keep them coming. If I can address it immediately, we will do so. If not, I'll definitely reach out to you after the presentation. I know folks want a lot of research and data and some solid information. We're happy to share that. So this part of the briefing is kind of an abridged version of what our student loan help clinic looks like for student loan borrowers. But we recognize that when we're talking to lawmakers and we're talking to staff, it can be challenging to understand all the updates and ways to impact the changing policies without fully understanding the student loan system broadly. And it is quite complicated. So I'm going to go through some basics about the student loan system that I think will help inform a discussion about recent policy updates. And then we have Lindsey Clark from Savvy, one of our partners that helps with our outreach and education programming. And she is an expert on all the changing rules and how it's impacting student loan borrowers. So about today's briefing, we're going to cover the basics and the policy updates, as I just mentioned. I definitely want to take some time to answer questions, so keep them coming. And I always add this as just a point of clarity. Student Debt Crisis Center, we are not financial counselors and we're not attorneys, but we are advocates. We fight for student loan reforms, and we talk directly with thousands of student loan borrowers every day, and we provide free resources developed through our partnerships with experts. So it's hard to talk about student loan policy and reform without understanding the most important foundational element, and that is what type of student loan somebody has. You may be surprised to hear it, but we hear from student loan borrowers all the time who don't know if they have a federal loan or a private loan. And so I want to provide some clarity here. A federal loan is the type of student loan that you get at the Department of Education. And you do so typically by filling out a FAFSA form. This is the most common form of a student loan. Federal student loans have a lot of benefits. They have fixed interest rates. There are affordable repayment programs available to individuals. If you face hardship, you have opportunities to pause payments or to put your loans back into good standing if you go into default. And there are these real loan forgiveness programs that do exist for federal student loans. But we find as the cost of college increases, it can be more challenging for folks to cover the cost of college with just federal loans. And so we see a larger portion of folks having to access what we call private student loans. And those are the kind of student loans that a borrower gets by going into a bank or contacting a lender online like a SoFi or Wells Fargo or Discover for kind of a traditional consumer product. And those typically have variable interest rates. There's no guarantee that you'll get affordable repayments. All of the consumer protections that a federal loan has aren't promised. You have to work directly with your lender to achieve any of those benefits. So we focus a lot of our outreach on repaying federal loans, and that's precisely because the rules of the road for federal student loans are written into law. And so people have clear and understandable rights and options. And I want to walk through those right now. So when a borrower enters repayment, the first thing that happens is that they enter what is called the 10-year standard repayment. This is a repayment structure that assumes that you will make the same monthly payment every month at the same rate for 10 years. And at the end of that, your entire student loan balance will be paid off. That is great if you can afford it. But after talking with thousands of student loan borrowers, I can tell you that this is a huge challenge for many, many people. So we tend to turn our focus during our workshops and when we educate staffers and the public about the options that exist to what we call the affordable income-driven repayment plans. So many student loan borrowers, including myself, are enrolled in a program that's offered by the federal government called an income-driven repayment plan. And the way this works is that your monthly payments are based on your income and your family size. So it's not about how much you borrowed, but it's more tied to how much you can afford. And the way that this is calculated involves referencing your income in reference to the poverty index, the national poverty index. What this means is that student loan borrowers with very low income can pay as little as $0 per month. But in an audience like this, I should note that in a state like California, where we have a high cost of living and higher incomes that are commiserate with that higher cost of living, these income-driven repayment plans can be effective, but there's a big chunk of folks in states like California that are in an affordable repayment program and are still struggling to afford their student loan payments along with all the other costs in their life. So these are helpful programs, but they're not perfect. A theme during all of today's summit has been how complex and complicated the student loan system is, and that's a fact. So unfortunately, one of the obstacles to understanding your rights is the fact that there are over 5 income-driven repayment programs that are available to individuals. On the left here on this chart, we see the program Revised Pay-As-You-Earn and Pay-As-You-Earn. Those are the newest and most generous student loan affordable repayment programs. The way that these work is that you would pay a lower portion of your discretionary income, and you can stay in the program for 20 years. At the end of 20 years, whatever student loan balance remains is forgiven. At the other end of the spectrum, we have income contingent repayment, which is the oldest program. And the reason I said the new programs are more generous is because borrowers that are enrolled in the older programs pay more of their income each month, and the repayment time frame for completing these programs is 25 years, so it's longer. My best advice is not to memorize these programs. You can go to studentaid.gov and you can learn more about each one of these, because each one has its own qualifying factors. So some student loan borrowers can apply for any of these, others have fewer options. You can learn all about it at the Department of Education's website. So coupled with the income-driven repayment programs are what are the real loan forgiveness programs. And I say real loan forgiveness programs because there are a lot of scams out there that promise more than is actually written into the law. And that's kind of created confusion in the marketplace. Many borrowers don't trust that loan forgiveness is real, but there are actual federal programs that can erase your debt if you meet specific requirements. So let's go to the next slide and we'll dive into the most important and the biggest program when it comes to loan forgiveness at the federal level. So this program is called Public Service Loan Forgiveness. It's estimated that 1 in 4 workers across the country are working in a public service job. And that also includes folks that work for the government at all levels and also at state governments as well. So the program started October 1st, 2007. The way the program works is that a borrower must make 120 monthly payments, which is about 10 years. The 120 monthly payments can be within an income-driven repayment plan. So you can make a lower monthly payment, even as little as $0 per month if you're in one of those programs, and that counts. Payments are cumulative, not consecutive, meaning somebody can work for a public service worker, they can go into the private sector and then go back and pick up right where they left off. So you don't have to be making 120 qualifying payments all in a row. And what's most important for this program is that when the debt is forgiven, it's tax-free. There's no tax bomb. Your debt is just erased. Now, if you're part of the earlier discussions, you've likely already heard that a lot of borrowers over the years have missed out on public service loan forgiveness because there are qualifying factors that student loan companies failed to teach them and tell them about. So I want to lay them out so we're very clear here. The first element is, are you paying back a federal direct loan? There are several types of federal student loans. Older federal student loans are typically under a program called the Federal Family Education Loan Program. You'll see that often as FFEL or FFELP. Those older loans do not qualify for public service loan forgiveness. Direct student loans are the kind of student loans where the Department of Education funded the loans directly. These currently represent all of the new student loans that are issued. That has been the case for, I think nearly a decade now. So it's typically older borrowers with older loans that have disqualifying loans. Younger borrowers with newer loans should have a direct loan. The second component is, does your employer qualify? Public service work for this program is defined as working for a 501c3 nonprofit or any government agency, and you can do any job at that government entity as well. So I always use this example. You can be in the janitorial staff at City Hall, and as long as your employer is the city government, you qualify for public service loan forgiveness. The third component is, are you enrolled in a qualifying repayment plan? So a borrower can qualify for public service loan forgiveness in the 10-year standard repayment program. It doesn't really make sense because that borrower is just going to pay off their loans in 10 years anyways. So the other qualifying form of repayment are those income-driven repayment plans I talked about. So a borrower can couple the benefits. They can enroll in a lower monthly payment while making progress towards full debt cancellation within 10 years. Now, I just want to double down on these factors because each one of them is very important. I mentioned you can work at a 501c3 nonprofit. That includes charities, nonprofit healthcare facilities, so nonprofit hospitals also qualify, nonprofit private schools, legal aid services, and many, many more. It's all about the status of your employer. If they're a 501c3, you're in the clear. We hear from a lot of folks, they work at 501c4 political groups, or maybe they work for a labor union, which has a different 501 status. Those, unfortunately, do not qualify. And as I mentioned, if you work at a government, public safety, all of the firefighters, police, first responders, the public health folks who work at county hospitals and other facilities, teachers within public education as well, including all of the staff and faculty at a public school, and any other government employee. And to double down on those loans, the direct loan program does qualify. These are newer student loans, especially those after 2010. The Department of Education lends you the funds directly. You will have a student loan servicing company, so don't get the two confused. And then there's the FFEL loans. Those currently do not qualify. Part of the advocacy work being done across the country is to expand the program to include any type of loan so that borrowers are not excluded from the relief that they deserve. And lastly, this is the qualifying repayment. A qualifying repayment is an income-driven repayment plan, and you can couple that with student loan forgiveness. Now, what I'm really excited that we're going to cover today is Lindsey's going to cover shortly how all of these qualifying factors have been expanded to include people who maybe had a different type of repayment program, who maybe had a different, made payments that didn't previously qualify, but now do qualify. These are the exciting new updates that we're going to share with you momentarily. But I just want to give you a foundation of what historically the program has looked like over the years. And then there are these career-specific loan forgiveness programs. There are loan forgiveness for healthcare workers. There's loan forgiveness for teachers who want to qualify for the teacher loan forgiveness program as opposed to public service loan forgiveness. All of these have different qualifying factors. you should learn more at the Department of Education, and also visit the State Department of Education as well, who holds a whole bunch of different information about qualifying programs and different benefits that are offered at the state level. And I don't have time to get into it today, but there is a host of other programs that borrowers can have relief through. If you're disabled, if your school closes, like a for-profit college, if you've been defrauded by a fraudulent education program, and if you've had other financial obstacles through the loan and financial aid process, you may be eligible. All of these have very niche requirements, so we just don't get into the details today, but I want you to be aware of them because as you're working through your own situation, as you're talking to constituents, as you're thinking about ways to help borrowers, all of these are options that can lift the burden. So that is the crux of the existing student loan programs. I'm going to pass it to Lindsey, who's going to talk about COVID updates and some of the changes to the things I've just talked about that have made these programs work even better.
Great. Thanks so much, Cody. And it's great to be with you all. I'm seeing some of you in the chat I've actually been able to work with personally, so it's really a pleasure to be here. I'm going to be talking through some of the important updates that have come to light recently. Some of them actually within the past 2 years around COVID-19 pandemic relief, some of the more recent updates regarding programs like public service loan forgiveness, and then some additional information around things like servicer transition and important topics that you should be aware of, especially as we head into repayment at the beginning of next year. So on this next slide, we're first going to start off with some of the basics around the COVID-19 relief that if you weren't aware of before, I hope that you can certainly become aware now. So back in March of 2020, when the CARES Act went into effect, payments were suspended and interest was waived for the majority of student loan borrowers, those with federally held student loans, and that has been extended until January 31st of 2022. So payments are scheduled to resume in February of next year. Now, a couple important points about this payment suspension. Any of these months, so about 23 in total, when it comes time for February of next year, are able to count as eligible credits towards the 120 you need to qualify for public service loan forgiveness. They're also able to count as eligible payment months towards default rehabilitation. So those are sort of two important points that I think many borrowers are confused or unaware of that are important to know. Now, borrowers during this period of time can recertify their income-driven repayment plan, based on any changes in income at any point in time. So let's say your income was negatively impacted during the pandemic. You would definitely want to recertify your income-driven repayment plan as soon as that sort of negative impact happens, so that you can lock in a potentially lower monthly payment, and that'll be locked in for 12 months. So even if, for example, if you became unemployed and your income is $0, you're able to lock in as low as a $0 monthly payment. On this next slide, I just want to sort of talk a little bit about this COVID-19 relief as it pertains to borrowers that are in default. So for borrowers in default, there were supposed to be a hold on any tax or Social Security withholdings for those with these federally held student loans. So if you were experiencing any type of involuntary collection is what they're called, again, being on your tax or Social Security being withheld or your wage being garnished, those were all supposed to have been stopped during this time. Any collections activities like calls, letters, etc., all of those were also supposed to have been paused as well. If you're still continuing to receive any of these, I highly encourage you reach out to Cody and the team at Student Debt Crisis Center. We'll be able to help work with you to get those stopped and escalate those concerns if necessary. Great. Now, who receives and who is eligible for this COVID-19 relief? And this is where it gets a little bit tricky and many borrowers were confused. So those who are eligible to receive relief are those with federally held student loans, meaning they are loans owned by the Department of Education. Now, there's a subset of federal loans that are not federally held. They're known as commercially held. And those commercially held loans are a portion of those older FFEL loans, FFEL loans that Cody talked about. These commercially held loans are owned by third-party or private institutions. And while they are still federal, they are not federally owned. I know it's a word salad right there. So if you had a commercially held FFEL loan, you were not eligible for this pandemic relief. And Cody, correct me if I'm wrong, I think it was about 6 million borrowers who had commercially held FFEL loans that were not eligible. So not insignificant there. The other thing about sort of eligibility here is private loans were also not eligible. So if you had private loans, you were not able to benefit from this payment pause. Now, one sort of caveat here, until recently, all of these commercially held FFEL loans were excluded from this relief. More recently, if you have a defaulted FFEL loan, that is now eligible to have interest and debt collection pause. So just on defaulted FFEL loans. So again, sort of all these nuances around this program, but I think the big takeaway here is that the majority of federal student loan borrowers do have federally owned student loans at this point, but there is a subset that have commercially held federal loans that are sort of under different eligibility. All right, moving on to the COVID-19 relief timeline. So again, just to give everyone a sense, back in March of 2020, when the CARES Act went into effect, that is when this payment pause began. In January 31st, 2021, that was sort of the first preliminary relief end date that was set under President Donald Trump. September 30th of 2021, it was first extended, set by President Biden. And then January 31st of 2022, this second extension, and what we expect is the final extension, again, set by President Biden on this payment pause and relief. So what that means is come February 1, 2022, payments are expected to resume. We can go on to the next one, Cody, thanks. Great. So a couple updates around the Public Service Loan Forgiveness Program, and Winston did a great job of sort of capturing PSLF, and I'm just going to sort of be reiterating a couple of these here. So about 5 or 6 weeks ago, the Department of Education announced this limited waiver that basically expanded eligibility for the program for this sort of year-long period and would allow all payments by student loan borrowers to count towards public service loan forgiveness, regardless of what loan type you had, what repayment plan you might have been in. They're also going to be reviewing previously denied public service loan forgiveness applications for errors that might have occurred. And so this gives borrowers the ability to potentially have, their previous PSLF determinations reconsidered. As far as borrowers who are going to have any of this forgiveness automatically credited, they should have received communication from federal student aid in the past couple of weeks. And so just as sort of an FYI there, again, and you want to make sure that your contact information is updated on your servicer account as well as federal student aid. Last but not least, they will be providing automatic credit for PSLF for any military service members and federal employees using federal data matches. So hopefully this is sort of an exciting new improvement to the Public Service Loan Forgiveness Program. So a bit more detail on qualifying for PSLF, because I know that this can get very confusing and overwhelming. So what does qualify for public service loan forgiveness? Well, first, loan type, any and all direct loans. That includes direct subsidized, unsubsidized, direct grad plus loans, direct parent plus loans, although those would need to be consolidated first in order to qualify, and a direct consolidated loan. Your employer, any government organization or entity at any level, federal, state, local, or tribal, any 501c3 nonprofit, and some other critical public service career areas. As far as repayment plan goes, you can be on any income-driven repayment plans, 10-year standard repayment, standard extended, standard graduated. This is all now included. And I'm going to talk about that in the previous slide as well. Or I'm sorry, in the next slide, Cody. Great. So previously, what did not qualify? So previously, as far as loan type goes, if you had these older FFEL loans, FFEL, Federal Family Education Loans. If you had Perkins loans, loans in default, and private student loans, okay, those did not qualify. As far as employers go, government contractors, labor unions, 501c4 nonprofits, and political groups, as well as any religious instruction. And previously, what did not qualify as far as repayment plan, extended repayment, graduated repayment, extended graduated, these are all forms of sort of the standard plan, as well as deferment, forbearance, or default. All right, so that's sort of what previously did not qualify. So I'm now going to sort of walk you through the steps of how to assess basically your eligibility based on this new information and waiver. So first and foremost, you want to determine what type of loans you have. So you can do this by going to studentaid.gov. You can visit the My Aid section on that page and scroll down to what says the loan breakdown section. You're going to find a list of each of the federal loans you have. Even if you've paid off that loan or if it's been consolidated, they will all be there. This is sort of your official record of what's going on. And then you're going to want to look for a few specific things. If you have direct loans, your loan sort of title or name will begin with the word direct. So you should look for that. If you have this older loan type known as a FFEL loan, FFEL, it will say FFEL. And if you have a Perkins loan, it will begin or include the word Perkins. So these are the things that you want to be looking for, right? Now, after you determine your loan type on this next screen, based on what type of loans you have, we're going to go through a few different scenarios here. So let's say you have at least one federal loan that is not a direct loan. So it's a FFEL loan, it's a Perkins loan, it's an older type of loan. So you will need to submit a consolidation application as well as a public service loan forgiveness employment certification form before October 31st of next year, 2022, to ensure that any payments that you've made on those loans while they were not direct loans are counted retroactively. All right. The Department of Ed encourages that you consolidate before using the public service loan forgiveness help tool to certify your employment. If you want to check your employer's eligibility, you can do so at studentaid.gov/PSLF. And while the PSLF help tool is not configured right now for borrowers with these non-direct loans, it should be later on this year, right? But again, you can check that again at studentaid.gov/PSLF. All right, so that's if you have at least one loan that is not direct. Now, let's say you have direct loans, okay, and some you have employed, some of you have certified that employment. So if you've already applied for public service loan forgiveness, okay, and had some of your employment certified, maybe it's not all of it, but some of it, the Department of Education will award any additional payments they can without further action from you. That should happen automatically. And likely, and you should, if you've already submitted an employment certification form and had credit certified, your servicer would be FedLoan. All right, and you can check those through your FedLoan account. Federal Student Aid may contact you to ask you to certify additional months of employment. So again, it's important to have your contact information up to date. Look out for an email from Federal Student Aid to let you know how many additional payments they may have preliminarily determined you to be qualifying for. And otherwise, you don't need to do anything until you received an updated payment count or other communication. So again, that's if you have direct loans and some of that employment certified already. Now, let's say you have direct loans, but you haven't submitted anything at all. That's totally okay. So what you're going to want to do first is submit a PSLF employment certification form so that the Department of Ed can review your loans under these new rules and determine whether either your current or previous employers would qualify for public service loan forgiveness. You can submit this form through the PSLF help tool at studentaid.gov/PSLF. I'm sure my colleagues are putting that in the chat as well. Now, because the Department of Ed expects to see an influx of applicants due to this announcement, you may see some delays in processing. You just have to be patient. But you must submit this employment certification form before October 31st of 2022. So that's very important. Put that on your calendar right now. Okay, last scenario here. What if you tried to certify your employment but were denied? So if the department previously said your employer was not eligible for public service loan forgiveness, you're going to want to submit a new employment certification form to see if you can now receive credit towards forgiveness. Again, you can find which employers the department already deemed eligible through the Pslf help tool. And there are new updates that do not affect qualifying employer rules, or I should say these new updates do not affect these qualifying employer rules. However, your employer still needs to be a governmental organization. So again, federal, state, local, or tribal, a 501c3 organization, or a non-for-profit organization that provides a designated public service. Okay, so wrapping things up here, and I know we're closing in on time, and I want to leave time for some Q&A here. So very briefly, a couple updates when it comes to student loan servicers. I'm sure some of you might have heard in the news or actually received communications from your servicers about your loans transferring. So 3 federal student loan servicers, Navient, FedLoan, also known as PHEAA, and Granite State, have all announced that they will stop servicing loans in the near future. They are ending their federal contracts. Now, this is going to affect approximately 16 million borrowers, all right, or about 35% of all student loan borrowers out there will be getting a new loan servicer. Now, this servicing transition, it doesn't mean anything happens to your loans. They simply transfer to a new servicer. That servicer will be in charge of managing your repayment and processing of your student loans. Now, one caveat here, FedLoan Servicing is actually the sole company that services federal student loans for the Public Service Loan Forgiveness Program. And this makes things a little bit trickier because, as we know, we have this year-long period where, while during this potential transition, they are also supposed to be servicing this waiver. And so their contract has been extended, but it just throws into question for many people, and I've seen many borrowers who are confused, should they still be submitting things to FedLoan or not? The answer is yes. If you have public service loan forgiveness or you're pursuing public service loan forgiveness, you should continue to submit your documentation to FedLoan. All right, moving on to this next slide. So just a quick review again of federal servicers and private servicers. And Cody mentioned this a little bit when he talked about the difference between federal and private loans. So federal servicers are contracted by the Department of Education in the repayment and management of your student loan. These are companies like Nelnet, Navient, Mohila, Great Lakes, FedLoan, et cetera. Private servicers are non-federal institutions, third parties and private, that are servicing your loans. They can also, you can have a federal servicer that services both federal and private student loans. I'll use myself as an example. I have Navient and I have both private and federal student loans with Navient. But private servicers, these third party or commercial lenders like a Wells Fargo or Discover are going to be servicing private loans. Moving on to this next slide. Great. And just wrapping things up here with a few other federal updates that I wanted everyone to be aware of. So first and foremost, on borrower defense, the Department of Education to cancel over about $1 billion in student loan debt for students scammed by for-profit colleges like ITT Tech. FEL loans in default. Again, we mentioned this earlier. The payment pause was extended to commercially held FEL loans in default. Borrowers with disabilities, the department also secured additional relief for totally and permanently disabled borrowers, and the payment pause extension. Again, just sort of the big recap here. The extension ends January 31st, 2022, so payments are set to resume February 1st of next year, 2022. So I'm going to pause there, I think, Cody, and turn it over to you to see if we have any questions that we might be able to answer.
Yeah, I mean, I've got a lot of great questions. I think this first one from D is interesting. There's always a lot of confusion related to income-driven repayment plans. D is asking, is it possible to have both repay and IBR type loans? So I think D's maybe crossing wires a little bit between the different types of loans and the different types of repayment plans. Lindsay, maybe you could jump in and provide some clarity. Oh, Lindsay, I think we've got you on mute.
Sorry, just muted myself. Okay. So IBR and repay are simply types of repayment plans. So you likely have a federal loan. It's likely a direct loan. Repay and IBR are simply names for how you repay those loans. So those aren't types of loans. Those are just simply names of how you make those repayments. So, if you are in an income-driven repayment plan, those can be either repay or IBR. You might have loans that are in different types of repayment plans. So that's certainly possible. But IBR and repay are types of repayment plans, not types of loans. So hopefully that clarifies that for you, but feel free to ask any follow-up questions.
Yeah, and I would add, if the question there is about having different types of loans or different repayment plans, a borrower can have multiple types of student loans, and a borrower can also have different repayment plans for each one of those loans. So that can be, somewhat complicated, but it's important to understand the repayment programs have their own set of names, requirements. The student loans themselves have different names, and that's why, go to the source, learn about your options, and kind of connect the dots as far as what your type of loan qualifies for with regard to repayment programs. A question that was in the Q&A box from Katarina. We get this all the time, but Katarina wants to know if a student loan borrower can apply their public service work retroactively. So if you're one of the borrowers that just found out about public service loan forgiveness today, what can you do about your previous work?
Yeah, absolutely. This program is retroactive. So anything from October of 2007 to present is fair game as far as eligible employment goes. Under this waiver now, it's expanded potentially the number of eligible credits that you could have accumulated, during that time. So it is absolutely retroactive, and I highly encourage you. The best way to go about checking and sort of taking that next step is by submitting a Pslf employment certification form that gets signed off by you, the borrower, gets signed off by your employer. Multiple employers, you need multiple forms, with that sort of dates of employment, and then that gets submitted to Fed Loan Servicing as of now. And that sort of starts the process. They will review, back and make sure your employment was qualifying, you made payments, and that's how you start to track towards public service loan forgiveness. So don't wait until you think you've reached those 10 years. You can submit that form on a yearly basis. It's not required, but I highly encourage you to, or anytime you change employers.
Great. I see a question from Carmen. Carmen wanted to know, who can you contact to consult with if you feel that there's some sort of error in your public service loan forgiveness application. For Carmen, they believe that their employer appears to be a nonprofit, but their application has been denied, saying that the employer does not qualify. And I see, Chuck actually responded directly with a suggestion of going to the Department of Education Student Loan Ombudsman. So I don't know, Lindsey, if maybe you have additional advice, or maybe you can expand on what the Ombudsman's office can do for a borrower.
Sure. I would highly suggest going to the Student Loan Ombudsman. We've had tremendous success in escalating cases through the Ombudsman office. It essentially performs a third-party review of your servicer and requires them to respond within 15 days. And from our experience, we've been able to sort of have those issues resolved. And so I would say that's probably the best place to sort of escalate a case like that. And I believe, Cody, you guys might have the direct contact or the email to which for the Ombudsman that would be the best to use.
Yeah, I'll bring that up and I'll drop that in the chat here. I'm going to take one more question before we do a quick summary of today's event. I know Sam wants to jump in and thank folks, but my last question, Lindsey, is how can you find out how many past student loan payments you have made that qualify for PSLF?
Sure. So the best way in order to get this process started is you would need to submit that public service loan forgiveness employment certification form. That's basically because they need to have a record of if you worked for a qualifying employer, during what dates, and then they sort of line that up with your payment history. And so that's how you get the process started. If you've never submitted that form before, You can access it online at studentaid.gov and or the Pslf help tool, but that's what's going to be able to get this ball rolling.